Hey, welcome back to the Dividend Hunt. Today, we're diving deep into Hong Kong's largest REIT, Link Real Estate Investment Trust, HKEX stock code 00823. As Singaporean investors looking for stable, income-generating assets, Link REIT, with its immense portfolio, seems to fit the bill as a potential dividend stock. But is it a wise investment? We'll break down its portfolio, review its fundamentals and earnings, and discuss the critical issue of exchange risk for us in Singapore. Chapter 1: Portfolio and Investment Thesis. First, Link REIT is Asia's largest REIT by market capitalization, owning a diverse portfolio of over 150 properties. While it's expanded to mainland China, Singapore, Australia, and the UK, its core is still in Hong Kong. Over half of its portfolio value comes from its Hong Kong retail properties, specifically community and neighborhood malls. This focus on community-centric retail is a key part of its investment thesis. Unlike high-end luxury malls that are more vulnerable to tourism fluctuations, Link's properties serve the daily needs of local residents. This provides a more resilient and stable stream of rental income, which is the bedrock of its dividend-paying ability. Chapter 2: Fundamentals and Earnings Review. A quick review of its recent financial highlights shows a track record of growth in key metrics. Revenue has been on an upward trend. For the year ended March 2025, revenue was HK 14.22 billion, up from HK 13.58 billion the previous year. Net property income, NPI. Similarly, NPI has grown, reaching 10.62 billion Hong Kong dollars in 2025. This shows the company's ability to maintain a healthy margin. Total distributable amount. This is the money available to be paid out to unit holders. It has also shown a strong growth trend over the past few years. Dividend per unit, DPU. This is what dividend investors care about most. For the year ended March 2025, the distribution per unit was $272.34. However, while top-line figures have been solid, some recent earnings reports have shown a negative net income. This is often due to non-cash items like revaluation losses on properties. Investors should look at the distributable amount and net property income as more reliable indicators of the REIT's operational performance and dividend-paying capacity. Chapter 3: Dividend Review and Investment. As a dividend stock, Link REIT has been a consistent payer. Its current dividend yield is attractive, with a forward yield around 6.7% as of late September 2025. It also has a long history of semi-annual dividend payments. This consistency, coupled with the stability of its underlying assets, makes it a compelling option for income-focused investors. It's also worth noting a key advantage. Link REIT is the only internally managed REIT in Asia. This means there are no external management fees, which can eat into a unitholder's returns. The structure that can align the interests of management more closely with unit holders. Chapter 4: The Exchange Risk. Now for the big question for us in Singapore: exchange risk. When you invest in a stock on the Hong Kong exchange, your investment and dividends are in Hong Kong dollars, HKD. When you convert your dividends or sale proceeds back to Singapore dollars, SGD, you are exposed to fluctuations in the HKD, SGD exchange rate. The Hong Kong dollar is pegged to the US dollar. This means the SGD, HKD exchange rate isn't fixed and can move. A strengthening SGD against the HKD will reduce your returns in SGD terms, even if the stock performs well in HKD. Conversely, a weakening SGD would amplify your gains. This is a crucial factor to consider in your total return calculation. Chapter 5: Conclusion and Buy Proposal Assessment. So, is Link REIT a buy for a Singaporean investor? The upside. Link REIT offers a stable, high-yield dividend from a resilient portfolio of community properties. Its internal management structure is a plus, and its historical track record of growing revenue and distributions is encouraging. The downside. The primary risk is the unpredictable Hong Kong real estate market, particularly in the office and retail sectors which face challenges. And the foreign exchange risk between HKD and SGD adds another layer of uncertainty to our returns. It has compelling investment thesis as a dividend stock. Its portfolio of resilient community assets and its internal management structure are strong positives. However, a potential investor must be comfortable with the ongoing dynamics of the Hong Kong real estate market and be aware of and accept the foreign exchange risk. If you are an investor looking for a consistent income stream and are prepared to manage these risks, Link REIT could be a valuable addition to your portfolio. Information in this video is provided for educational purpose only. Always do your due diligence or so speak to licensed financial advisor before making investment decisions.